Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 9th of December. Starting off with Contango Holdings, where we've had months of consolidation between 4 and 6 pence, and it looks like finally breaking to the upside with a bull flag at resistance or resting on old 6 pence resistance. That's normally a plus point. Also, the near-term moving average is all rising in harmony at the moment as well. And so while we're above, at least while we're above the 5.5 pence area, which is where the near-term moving averages are, we're looking for the upside to continue, hopefully as high as that resistance line there from June up to 14 pence over the next 1 to 2 months. If you're cautious on the shares and looking for a buy trigger, that would be an end-of-day close above the initial December resistance at 7 pence. So we're not far away from that at the moment. Next stock, which is of interest, perhaps in a rather esoteric way, is Eddie Stobbart. Here you can see that today it's all about today's price action, really, with the stock sort of presumably taking out all the stop losses and all the weak hands there. Previous support there at 6.15 pence, and the low today around 6 pence. So that might have shaken people out, and obviously when you've shaken people out, there aren't many sellers left. Quite a swift move back higher, and what we're looking for here really is an end-of-day close above the initial December resistance at 10 pence to take the shares higher, at least for a retest of last month's peak towards 14 pence. I suppose the big prize would be up to 16 pence if we can hit that September resistance line projection, which would be the best case scenario target at the top of the broadening triangle, which I have just managed to draw. Going on to, in fact, if you want a stop loss in terms of where we are now, probably an end-of-day close back below the 50-day line, which should be enough at 8.25 pence. But obviously the risk here is really down towards the 6 pence area. Stock which is looking rather well set up at the moment is Eternity Nets, where we've got Networks rather, where we've got rising trend channel here from back in June, top of the channel heading towards 47p, maybe a bit more actually. The line's slightly crooked, but towards 50 pence anyway. And what we've had here is a break above the 200-day moving average at 24 pence. All the near-term moving averages are rising as well, which is another plus. And we've also cleared the initial December resistance at 28 pence. So we get an end-of-day close above that particular level today, or for the rest of the week, then the 50 pence area could be on track for as soon as the end of next month for Eternity. On to a stock which has been one of the highlights of the year and even got press coverage with its 800% rise. One or two hiccups along the way, especially in June, but looks like that was more designed to shake people out of their positions rather than anything else. Current situation here is that we've broken above that June resistance at 0.88, let's call it, and while we're above that, looking for a top of March trend channel target as high as 2 pence, hopefully over the next 1 to 2 months. Adding credence to the upside argument is this bull flag resting on old resistance, the same kind of setup that we've just seen in Contango, and basically the longer we stay above 0.88, the greater the chance of 2 pence. End of day close above the initial December resistance of 1.04. We've already had that kind of price action today, and so hopefully if we continue that for the rest of the week, then the target of 2 pence seems all the more credible. On to Gunsynd, where the original call here was a break of 0.8 leading to 1.8. Obviously we've fulfilled our bullish dreams on that, and we've also even hit a line of resistance from July, which was looked rather optimistic even yesterday at around the 2.4 pence level. Now we're just trying to work out what the next destination for the shares might be, given the way that we've got a trend line that can be drawn from March running through the 4 pence area. Then that would be the next hopeful destination for the shares over the next 1 to 2 months. Upside valid while we hold above the initial resistance of the week at 2.1 pence, so above 2.1 through 2.4, and hopefully up to 4.5 pence, which is a 1 to 2 month target for Gunsynd. But a nice inside day breakout today and we've held the gap also over the weekend as well. So that is a pretty strong setup for the shares. Happy situation, hopefully, for Hurricane Energy, where we've had a lot of base building over the recent past. Looks as though we're on our way now. Finally, the smaller oil and gas stocks have taken a long time to recover, even though the oil price has actually become much stronger, and obviously with the vaccine news as well. We've got a rising trend channel here on the Hurricane Energy chart from August. The resistance line projection heading towards 10 pence, and that target hopefully on track over the next 1 to 2 months, while we hold above the floor of the channel from October around the 4 pence area. If you're cautious on the shares, which some might be still, an end of day close through last month's intraday peak at 5.4 pence would be the buy trigger for a move towards potential 10 pence target. One of the stocks of the last week or so, or especially since last week, has been Helium One, where everybody's got their hot air label on the shares, but has been well backed and lots of interest at the moment. Current situation is on the hourly chart here that while we're above 7 pence, which was the initial resistance for the shares, we could still hit a target up towards the 10 pence zone. See the shares sort of withdrew from the area near the top of the channel, but above 7 pence we could still head up to 10 pence, even if the shares then go into consolidation after that. The bull argument very much in place while we hold above the floor of last week's channel at 6 pence, but ideally there's no break back below 7 pence. Saw Codal sort of nudge around a bit yesterday on the bullish side, and it's fulfilled that promise that we had with the strong candle from yesterday. The technicals here really driven by this the break of this resistance line there from October. Let's try and draw it a bit more successfully, but basically the break of 0.8 pence, 0.08 pence rather, pointing the shares up towards the initial October resistance of 0.11, and hopefully after that a retest of the September peak at 0.17 pence over the next 1 to 2 months. Stop loss on the buy argument back below yesterday's low at 0.06 pence, but ideally there's now no break back below 0.08 for 0.08 rather for Codal Minerals. Stock which is being traded quite actively today is Rearbold. Here we can see that shares have sort of trying to bottom out after that horrible gap down and that break of that old low there at 0.47 pence. Ideally, we get an end of day close back above, or a weekly close back above 0.47. So that's really the big level to break in terms of recovery. But looking at the near term chart, basically breaking that neckline resistance there from November around 0.42 was really the start of the recovery here, and hopefully the shares will at least be able to fill the gap up towards the 0.55 level over the next 2 to 4 weeks, or even less, hopefully. Best case scenario target probably at the moment up to that 50-day line at 0.55. Covered Savannah Petroleum yesterday, but here we've got the stock moving away quite nicely at the moment. Just it's sort of really proving that it had broken that resistance line there from October, that line there around 2.7 pence, and while we're above that, looking for a September resistance line projection as high as 5 pence over the next month or so. If you're cautious on the stock, maybe you want to wait for an end of day close above, or end of week close above 3 pence, but it looks as though the shares will be able to do that either today or later in the week. I've said before that it all depends on the 12 pence level for Wishbone, and certainly today that seems to be proving the case. That late November peak was at 12.3 pence, so a decent end of day close above that today should be enough to get the shares on the way. In fact, just breaking 12 pence in that November resistance line has really done the trick for the bulls and for the recovery here. In terms of what the upside might be, currently looking for a target which would be the top of the rising trend channel from last month, currently heading towards 18 pence, which is, I think, basically what we were looking for a couple of months ago, or at least back in October, as a potential best case scenario target. So for a wishbone, above 12 pence up to 18 pence, hopefully by the end of this month or going into the first part of January. Finishing off with another stock where there's not much charting data to go on, but is looking very encouraging indeed. In fact, I shied away from looking at the stock Zinnwald Lithium on the initial break of that November resistance line around 7.5 pence. Now we've broken neckline resistance and the November intraday high at 8.65 pence, and above that we're looking for the top of the rising October trend channel's high 16 pence over the next 2 to 4 weeks. The upside argument in place while we hold above 7.5 pence, which is the floor of the October channel. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.